Hey guys, welcome to my YouTube channel. It's David Francis here again, and I thought to bring this video. And the title of this video is what discipline actually means in forex trading. So I speak to a lot of traders DM me all the time, and we talk. And what I notice is most of these traders doesn't know what it actually means to stay disciplined in the world of trading. So I thought to bring a whole new video elaborating more on discipline and what it actually means. So in forex trading, discipline refers to the ability to follow a well-defined trading plan and follow a set of rules consistently over time. It involves controlling your emotions and sticking to proper risk management and your strategy. Even in the face of market volatility or market opportunity, trading discipline will make you stay put. What this means is that even if you are seeing an opportunity in maybe it's not aligned in your trading plan, or maybe you're seeing an opportunity outside your section, or even if you're seeing the market volatility and the market is just buying and selling with huge volatility, trading discipline will help you stay out of that market and stay put because it's not part of your plan. So discipline helps traders to avoid impulsive decisions and to stick to risk management and maintain a consistent approach towards trading. So it's very important for you to follow a plan or a strategy over time. This will make you successful, and then it will make you long-term achieve success in the forex market. So staying disciplined in the forex market is hard. It is very challenging. It's not easy. I won't sit here and tell you it is easy or you can do it. It is hard, but here are some steps that can help you stay disciplined trading the financial market, which is the forex market. So number one is set a clear trading plan. So what this means is that your trading plan should consist of your entry and your exit plan, risk management and profit taking, your trade selection, what section you trade, what are the sessions you trade, what are the pairs you trade, what setup will you be looking out for. Is it support and resistance? Is it breakout? Is it break and retest? Is it divergent? Whatever it is, you should incorporate this into your trading plan. So number two is stick to your plan. When you have written out this plan, it requires you to stick to this plan. Stick to this plan. So whatever you have incorporated into your trading plan, you are to stick to it. Avoid deviating from your plan. Your plan should include your emotions. Yeah, it will help you stay out of impulsive decisions because you already said, "Oh, I will need to see this and this to take this trade." So when you don't see those criteria, you won't take any of those trades. It will require you not to take those trades. So sticking to your plan, whatever you've said you will do, what session you will trade, what pair, what setup, that's what lot size, position sizing that you will take. This is what you have incorporated into your trading plan. So you are to stick to it. So number three, practice proper risk management, which is very vital. This helps you to protect your capital and will prevent you from a substantial loss. Okay, so improper risk management is very bad, and you are to follow a rule in observing proper risk management, which is a vital skill that will make you to be successful. So your risk management should consist of your stop loss, what pair would I be trading, and what stop loss would I be using. Is it forex? Is it indices? Is it a metal, gold? So we know each of these pairs and this commodity and indices move differently, and it requires you to have a plan according to it. You can say, okay, if I'm entering a forex pair, I'll be using 20 pips, 25 to 30 pips stop, and if I'm trading gold or indices, then I'll have a different stop loss, and I won't be using more than 20 pips, 25, 30 pips stop loss at a given trade. Then you risk to reward, what you tend to make out of that, and also your position sizing, because you saying you were using 20 pips, 25 to 30 pips per trade, what lot size will you be using? Because the lot size will determine when that stop loss of 20, 25 to 30 pips stop loss hits, what amount will you be losing per that trade. So your position sizing, so your risk management should consist of all this. And number 4 is develop a solid trading plan. Your trading plan should be very strong. It should consist of your strategies, your position sizing, which is all these that I have mentioned. And number 5, maintain a trading journal. Trading journal helps, okay? It helps. But one thing I will tell you is it is hard to keep a trading journal. It is very hard, but that's where the whole secret and everything lies. That's where you're going to know how you're behaving at a certain market behavior, a certain market activity, and it will help you improve. It is very hard. It is hard in the sense that, let's say today is Sunday and you're writing your journal for the week. Okay, I want to keep a journal for this week, Monday, Tuesday, Wednesday, Thursday to Friday, and then Monday comes and then you made a profit. You can easily, because you made this profit, you can easily open your trading journal, your book, and jot it down. I entered this one standard, I made 50 pips out of this, that, and I'm up 5% of my account this. But when you have taken that loss, would you feel that same enthusiasm to pick up your trading journal to jot it down? It is very hard. It is hard, but that's where the secret lies, in you to know yourself more and how to improve. So if you find it hard jotting down, writing a journal, then you should use an automated way to journal your trade, to journal your trade, your emotions, everything, what you saw, and how you reacted, and how long you hold your positions, and how your market take you out, or how your take profits was being hit. You can use an automated. There are a lot of automated platform that can help you journal your trade, or you can just have a note on your phone that will help you journal this. So you can just easily just journal it, like, okay, I made profits on Monday, then Tuesday I hit a loss minus so pips, or minus whatever you hit, or today I'm down this. Most times it doesn't require you to go far more into detail so as to help you keep journaling it, because most times when you go too far into details, it is very hard to pick up your journaling straight 3 days of loss, 5 days of loss. But you journaling your trades will definitely help you, for sure. It's going to help you. So number 6 is continuous educating yourself. Continuing educating yourself. What this means is you should continue educating yourself, stay more updated in the market, what's going on, your news app, your CNBC, your forex market, your streets app, whatever those apps that help you to stay updated on the forex market. And then you should continue sharpening your skills in technical and fundamental. If you're the type that trade fundamentals, not just news release, you want to stay updated with what's going on in certain like say you trade the GBP USD, you want to stay updated with what's going on in the United Kingdom and as well as the United States. So you sometimes follow up this news, educate yourself, sharpen your skills, sharpen your skills on technical and fundamental. And the one more important thing is whoever you look up to, continue looking up to them. Whatever they say, you do, you listen to them, and this will help you to grow. And the last is manage your emotions. This part is very, very vital in discipline in forex trading, and I'm going to elaborate more on this. So emotions such as fear and greed can tend to make a trader go back on his words, go back on his discipline, go back on his trading plan, everything that he has written. And so learning how to control your emotions and avoid making impulsive trade is one way that you have observed high discipline in trading the financial market. So, and it is very hard because of greed and fear. So what this means is you want to be disciplined. You have written everything you want to do, the pair, section, lot size, pips, and everything you want to reach. But your emotions can make you go against that plan and stay in discipline, because we are humans. It is money in your live account or your funded account. So if you don't know how to control your emotions in terms of greed, then it will be very hard for you to stay disciplined, in the sense that let's say you're in a trade and then you plan on getting 30 pips out of this trade, or let's say 40 pips out of this trade. Let's use 40 an example, and then you didn't set to take profits. You just want to leave the trade open, and then after, let's say, 2 hours, you come back, you check your trade, and then you're floating 40 pips in profit, and you're in profit. Now, your discipline and your trading plan requires you to close down that trade, because you said you want to make 40 pips in profit. So that was your initial target. But because you are humans, your fear and greed is now in play. You will now like, okay, maybe this trade will reach 40 pips, and then it can easily go up to 60, 70, 80 pips. But that's not the case. You said you get out of this trade in 40 pips, but now you are being greedy and you tend to hold on this position more, and then the next thing you see is you are now giving back your profit. You are leaving more money on the table, and this trade is now going back close to your entry point. And one other thing that I have observed in this forex market trading psychology is, because this money is on the screen, sometimes we tend to neglect it, or we tend to easily go back on our words, go back on what you're written in our trading plan, and just mess up. So I want to use a different approach that will help you, that has helped me, and I believe it's going to help someone there watching this video. And different approach that can help you not just turn into a robot, but at least help you manage your emotions in terms of fear, in terms of greed, in terms of sticking and the discipline in the forex market. So this is a dollar note. This is $5. 1, 2, 3, 4, and 5. So we'll be using this as an example. You can see it's $1. So because sometimes these numbers are on the screen, it tends to mess up our psychology sometimes without us even knowing. So let's say this $5, we'll present it by saying, okay, this is $5,000. Let's say this is $5,000, and what we can do is, you're on this trade, you use one standard, and you're up 50 pips on your trade, and let's say you are in $5,000 in profit. Okay, if forex is in the case that we are seeing the physical catch, it will have the difference. It will have the difference in the sense that you seeing this $5,000 in catch will sometimes make you say, okay, let me take this and get out of this trade. This is $5,000 in cash. There's a lot I can do with it. I can sort out my bills. I can buy that cool laptop that I ever wanted. I can pay off my debt or help my parents with it. We can easily sometimes control our greed. But because it is on the screen, it is just numbers, we tend to hold this trade for long. And then let's say you were $5,000 in profit, and now what's going on now, because you are greedy, you didn't take this 50 pips already, or this $5,000 on your screen, then it tends to drop down. Now you're $4,000 in profit because you're greedy. You don't want to close down this trade, and then before you know, you are down another 1,000. You're now $3,000 in profit, and before you know it, the trade is going against you, and now you are in $2,000 in profit, and then you tend to close this trade, and then you say, oh no, I was up $5,000 earlier, and now I'm just left with 2,000. I left $3,000 on the table. Yes, because you were greedy. I'm not saying this is how it will be all the time, because most times when we take some certain trades, immediately we take profit, or it hit our take profit, then sometimes we see this trade continue going on our way. But what this means is, it means you should stick to what you have said. Stick to what you have incorporated in your trading plan. Stick to what you have said. You said you want to take 40 pips out of this move. You have seen that 40 pips, you have seen that 60 pips, you have seen that 80 pips. Kindly close that trade, because even if it goes for you that one time, it will make you want to do it again. It will make you want to, okay, you have said you will take 30 pips, and now it's 30 pips and you don't want to take it. You will say, okay, simply because it worked for me the last time, it's going to repeat itself again, so let me just continue holding this trade and see and squeeze more out of it. And then you are going against what you have said, your trading plan, and it's going to mess up your trading psychology. So I see it as because these numbers are on the screen, sometimes we tend to get greedy. Whereas if we are seeing this catch, then we are gonna at least be more cautious, because even if you have this $5,000 on your account, let me use the reverse explanation, and then you are in the trade, and then you said, okay, I'm going to lose just $2,000 on this trade, but then you didn't use the stop loss, and then this trade is going against you, you have already lost the 2,000. Now, for you to close down on that position, because you said you will only be risking $2,000, now you say no, because greed is not there, fear that you're going to lose that amount, you say no, let me hold on this trade and see if it will reverse and go my way, and the next thing you see is you are down another $1,000, you're not left with two. Then you see that you're down another $1,000, you're not left with one. And because of you have now gone too far into the drain, you say, oh, let me just leave it and see what happened. I've already lost more than I bargained for, and then you kindly watch this go, and then you blow your account. But whereas if this is catch and you have done the 2,000, you have done an extra, you can easily say, oh no, let me close this trade, I still have $2,000, I can withdraw this money and go buy something at the store, pay my debt, pay for whatever food and other things that I want to do. But because it's on the screen, these numbers tend to psychologically work against us. Sometimes it's for us, don't get me wrong, but sometimes for the inexperienced traders, it tends to work against us, and then we'll mess up. So remember that trading discipline is a habit, and you're not going to just go into that mode and you're 100% disciplined. No, it's going to take time. So stick to your trading plan, stick to whatever you have said, learn from your mistakes, and then you start seeing growth in your trading. And also, one thing I want you to know is you don't start climbing a tree from the top. Nobody starts climbing a tree from the top. You start from the bottom and you gradually walk your way to the top of that tree. So if you're just in on trading like a year, 6 months, a year, and a year plus, and you're struggling with staying disciplined or whatever areas, trading psychology, you're going to get there. As long as you learn from your mistakes, as long as you're consistently keep showing up in the market, you're doing your thing, and you journal your trade and learn from your mistakes, you're going to get the point. You don't just expect to see, simply because you haven't seen results in a year and a half, you're not disciplined, you're still making these mistakes, you're still going against your rules, emotions, fear and greed are still dealing with you, psychological, and you're trying to quit. No, just know that nobody starts at the top. Everybody starts at the bottom, just like climbing a tree, and then you walk your way gradually to the top of the tree. So I thought to bring this video to elaborate more on trading discipline, because some traders doesn't know what it takes to be disciplined, and I said I should bring this video. And please guys, please like, share and subscribe to this YouTube channel, and drop your comments down below what you think about what I've said, your own thoughts, your own opinion. I welcome all reviews, bad or good. I learn from it. Whatever you think I have said wrong, or whatever I think you don't agree with, drop it down below on the comment section, and I read all the comments and I respond as well. So thank you guys. Please subscribe to this channel, and then I will see you guys on the next one. Peace out guys. Thank you.